Hey, did you know that your financial advisor can save you thousands of dollars on your insurance policies?
Are you serious?
Hi, I'm Phil. This is another episode of Skye Simplifies, and I'm going to be talking about how an advisor can save you heaps of money on your insurance policies. So you can buy life insurance with three different options. You can go direct to the insurance provider, you can go through your super fund and set up the policy so it's owned through your super fund, or you can go through a financial advisor. So going direct with the insurance provider sounds like the best option. You've got the policy with them, it should be the best. However, it's often limited in terms of the options you can take out. And most of the time it's direct, it's done with limited underwriting. And if it's not done with limited underwriting, you get limited options. You often can't pay through your super fund to pay the premiums, and the structure is often limited. Second option is through the super fund. Now, this is great, your super fund can pay for it. However, you are limited as well with, you can't take out trauma insurance. There are limitations with your disability and income protection policies. It's often not the best way to go about it. However, we have been told for many, many years that this is the cheapest option. However, the research we've done internally, we quoted over 500 of our clients and compared their group policy versus the policy we can set them up with. The policy we can set them up with is generally more comprehensive, got a lot more features, and which just means the likelihood of getting paid a claim is greater if you've got better features. And often it was cheaper. Not all the cases were cheaper, but over that 500 clients, it was 38% cheaper going through a financial advisor than going directly to the super fund. So we often find that we can save our clients hundreds, if not thousands of dollars on their insurance premiums just on a like-for-like basis if we set up the policy as an advisor. And guess what? We get paid a commission. So the commission is already baked into that cost of the premiums, and it's still often cheaper than the super fund. Now, look, I'm a very untrusting kind of guy. If I saw someone on a video telling me that they're going to get something cheaper, first of all, I wouldn't believe them. But at the end of the day, as advisors, we're legally obligated to act in our client's best interest. So if it is in our client's best interest to go through the super fund, we will set up that policy. And if we ever compare a policy and recommend that someone replace that policy, then we have to provide what's called a product replacement table. So we compare the existing product with the new product that we provide. And that's how we've got so much data on the cost difference between super funds or direct products versus the products that we help our clients set up. So we've got clients from all different backgrounds, ages, occupations. I've been doing this for almost 15 years, and I've recommended someone increase their policy through their super fund probably less than 10 times. So again, it doesn't mean that your super fund insurance is no good and go and cancel it today. That's not at all what this message is, but it is just a really important message. If you are setting up insurance, go and speak to a financial advisor because we have the opportunity to save hundreds, if not thousands of dollars on your premiums.